Tanya, thank you so much for that. Time then to bring on board our guest for the evening. Ankur Shah, founder and CIO of Ashva Capital Management, is joining in from Dubai, of course, through a Skype connection. Ankur, good evening to you, and thank you so much for taking time out for us. Let's start by talking about the year gone by, and it's been quite the year, as you heard both Ajay and Tanya walk us through what kind of money investors have made. Going ahead, do you see this momentum for our markets continue in FY18? And, what are the factors you think that are going to be at play?
Yeah, I think it's been an interesting year for sure. You've had amazing performance in both the large cap and mid cap and small cap markets. But if you look at actually earnings, it hasn't been really material growth. So I think the key going into FY18 is that you've already had a re-rating in terms of a valuation perspective. But I think what you'll need to get the market going further from here is basically some pick-up in earnings growth, especially for the next 2 quarters or so.
Good. That's prompted me to my next question. The queue for report cards, as it were, aren't very far away. Many think that we really haven't seen the worst of the note ban impact. What are your thoughts on that? Do you suspect that that's likely to sort of creep up in fourth quarter corporate earnings?
Yeah, it's interesting. If you look at the GDP number that came out, it was about 7% for the Q3 number. And I think there's a lot of consternation in the market in general about whether that's a real number or not. But I think, it does reflect core strength in the market. And if you look at the Q3 earnings, they were pretty solid across the board. There really wasn't the kind of the dire scenario that people had kind of painted before the demonetization had taken effect. So I think we've kind of gone past that now. And I think Q4 should reflect, again, kind of strength you see in Q3. And I don't see or foresee much impact going forward.
So when you talk about strength in the fourth quarter, Ankur, what are you sort of looking at in terms of earnings growth for Indian corporates?
I think it'll be interesting to see what happens with FMCG sector. I think that's a key driver of kind of rural growth and the consumer story. So I'd be really interested to see how those results come out, because they were actually relatively weak in Q3. And I think for the banking sector also, it'll be an important quarter because you'll see the new NPA data come out, and whether or not we've kind of passed the peak in terms of the NPA formation, and if we've kind of crossed that hill now, and moving forward, we'll see a resolution to some of those major issues.
Okay, those are, of course, the factors that one needs to look out for. Let me talk to you now about the valuations of the market. At currently where we are trading, would you say that the risk-reward is in favor of the market?
Yeah, it's interesting. If you look at, kind of next year forward earnings, it's about an 18 times multiple, which is relatively expensive, but it's not out of line for the Indian equity market. And I think given the quality story, you have, a strong domestic growth story. Inflation is relatively under control. You have CPI coming at 3.65%, which is, extremely tame. And now you have this extremely bullish story about the Modi reforms coming through. And I think that's, in a 3 to 5 year time frame, I think, where we are in terms of valuation is quite reasonable. And I think it's not a bad time to be in the market as a whole.
Areas then in the market that you do think, look good. And I'm just going to quickly ask you where you think the leadership is going to come from. We've seen banks, run up quite a bit, and especially the PSU banks off late. Of course, that's largely on hope that you're going to see some sort of radical overhaul from the government as far as, the NPA menace goes. But right now, where would you sort of put your money in terms of where you think that valuations don't look very frothy or stretched?
I still think there's room to grow in the banking sector. I think, if we get we'll see what the resolution is today in terms of what they're going to do in terms of dealing with the NPA problem. But I think the private sector banks still have room to run. I think even the public sector banks to some degree, assuming we have quite a solid resolution coming forward. And I think kind of a contrarian play, I think the IT space might not be a bad place to look, just given the massive underperformance you've had of both Infosys, even Mindtree, for example, over the last year or so. So I think if you're kind of a contrarian bent, IT is a good place to look for some value plays right now.
If I could just ask you, why would you say that IT looks good? I mean, it's of course a contrarian bet, but if you would look at it, IT along with pharma, the only 2 sectors, in the year gone by that have actually, been laggards. You've seen the rupee that's only strengthened at a 17-month high, clubbed with the fact that there's, so much uncertainty on the policy front as far as, say, the visa regime is in the US. And, yet you're saying that there may be some value in investing in IT stocks. So, what is the case you're making?
Yeah, I think it's interesting. If you look at the overall growth of the U.S., it's at about 3%, so extremely strong growth coming forward. We'll get the Q1 data coming out soon, I think in early April. But so I think from a domestic growth demand story, I think there's, the U.S. economy is growing quite strongly. And I think with the failure of this healthcare bill, so you've seen Trump basically, been rejected to a certain degree. So I think for him to push through a very aggressive visa regime or even, further his domestic agenda might be difficult just given the gridlock in Congress. So I think that risk is kind of taken off the table somewhat, just given the, what's happened in Congress recently. And I think, with the rupee kind of strengthening so far during the last year and early part of this year, I think given kind of a Fed rate hike cycle in the U.S., I don't see much room for upward movement of the rupee going forward. So I think those kind of factors combined, make it kind of interesting to look at IT at the current levels.
Those are some of your bullish calls. But Ankur, what about, areas in this market that you wouldn't touch with a barge pole?
I think some of the infrastructure sectors I would still stay away from. I think it's still too early in the cycle. I haven't seen really CapEx pick up to a certain degree yet. So I think I would still avoid those sectors to a certain degree.
Okay, and my last question really is about, what the global picture is looking like, because of late you've seen stocks on Wall Street falter a little bit, especially after the healthcare debacle. Of course, they've picked themselves up and sort of moved on. But do you suspect that over, say, the next 3 to 6 months, if we do see, markets on Wall Street sort of sneeze, India could likely catch a cold?
I think India is relatively insulated because I think it's kind of a domestic demand story. I think if you've seen over time, even the last year or so, when we've had kind of corrections in the broader global markets, India has stood out relatively well as a kind of a safe place or a safe place to hide. So I think even if we do have a